It's one of the most important things you can do for your clients. This is the IssuesWatch podcast. Hi, I'm Don Meyer, Chief Marketing Officer at the New Jersey Society of CPAs, and welcome to the IssuesWatch podcast. Accounting Today recently reported that for the first time, between 30 and 40% of the questions in one of the optional sections of the new CPA exam will focus on financial planning. It's a strong sign to those entering the accounting field that the role of the CPA is expanding. A CPA's work must no longer revolve so largely around an inundation of work in the lead up to April and October filing deadlines. Instead, CPAs should be seen as an integral part of the financial planning process. Here with me to discuss how adding personal financial planning services to CPAs' offerings opens the door to multiple opportunities for CPAs, their employees, and their clients is Stephanie Hughes, the CEO of WIS Private Client Advisors. Welcome, Stephanie.
Thank you, Don. Thanks for having me.
All right, so let's jump right into it. What is wealth planning, and why is it important for CPAs to be involved?
A wealth plan is a blueprint for a family's life, encompassing a wide range of aspects, including investments, taxes, estate planning, retirement planning, and insurance planning. It's not only built around goals, but also around core values for a family and what matters to the family most in life. It's important for CPAs to be involved in wealth planning as they're privy to a lot of the data and information needed to start a wealth plan or a blueprint through the tax data that they have. When they're preparing tax returns, they obtain a lot of data that's needed for the creation of a wealth plan. The CPA also touches base regularly to obtain the information given these tax deadlines. So they have an immense opportunity to ask questions about certain pieces of data that they find about things that the client may need help on, and help them move up the value chain as the client's most valued advisor.
Okay, so a CPA is in a unique position to help their clients. As they begin the process, what are some of the goals of wealth planning?
Some of the goals of wealth planning are really to learn the basics of a client's current personal and financial situation, feel out whether the client is thinking short-term or long-term about their finances, obtain a general idea of a client's financial attitudes or the client's attitudes around money, uncover important information about who the client is already working with, their level of comfort discussing financial topics, if there's any area for other advisors to improve their situation, hear their money story, get them talking about themselves and how they view their current situation as much as possible, fill in the blanks on their story, starting with existing tax data, and partner with the client to create a roadmap to achieve short, medium, and long-term goals. As a CPA, you want to position yourself as that trusted advisor and that valued advisor and connect with the client on a personal level. And this is done through open-ended questions around the data that you already have.
And when you mentioned gauging attitudes about money, and does that mean, at least in part, whether somebody is okay with risk averse? Is that kind of what attitudes about money means?
That's part of it. The risk tolerance, definitely. Also, what really drives the client to make decisions. That really is something important in determining what their financial attitude is.
Okay. And you mentioned asking open-ended question. What are some initial open-ended questions that a CPA can ask a client to start building a wealth plan?
Do you know you have high capital gains and high taxable interest? Is your advisor considering tax in their investment strategy? That's an initial question that as a CPA you can ask based on what you see in their tax return and their tax data, right? If you do see that they have high cap gains and high taxable interest. Something else, if, for example, they have a big jump in AGI in their 2-year comparison after you've done their last 2 tax returns, you can say, I see you have a huge jump in AGI. What caused this? Is there anything you'd like to talk about? And this will get the client to really open up about any inflection point or any specific event that may have happened to them in their life in the past year. You can say, I see you have a 1 and a 2-year-old toddler as dependents. Do you have a will? Do you have life insurance? Do you have the protection that you need? Do you have an estate plan? If they have a lot of different 1099s and different accounts, do they have an overarching strategy for their investments? Do they have a financial plan that takes all of the investments into consideration, or are these one-off investments that they have accumulated over the years?
So those are all part of the client's financial story. What are some other components of a client's financial story?
The different components include funding sources of income, cash flow, any assets that they have besides the investment assets of the investment accounts that we've talked about, any checking or cash accounts, any real estate investments or other types of assets. That's another component that's super important to their financial story. Liabilities, their views on debt, and what the history was with any debt they may have. Is that credit card debt? Are these college loans? Are these mortgages, HELOCs? What kind of debt are these? Is it good debt? Is it bad debt? Any financial goals they may have, or short, medium, long-term goals. And then as we talked about before, their financial attitude, what drives the client to make decisions, and their attitude about risk.
Right. You've already mentioned some information that a CPA might already know about a particular client, and they may also have client data on a tax return that could be used for financial planning purposes. Are there some triggers in the data that could signal that a client might need help?
Absolutely. So income and capital gains, identifying if there's been a large jump in income, as we mentioned before, or an increase in their tax bracket, or outsized amounts of cap gains, those can signal an inflection point for the CPA to be involved and add value where the client might be missing something. Higher interest and dividends or higher distributions can be an opportunity for the client to speak with their financial advisor and really talk about going forward what their plan is for that, because these are all elements that would increase their tax. So you want to make sure that tax and financial are both integrated so that the client's bottom line is maximized. Highly compensated employees may get paid through equity compensation plans. That can be another opportunity for additional planning, and where the CPA can help. So all of these are really opportunities that the CPA can help the client with, and things that will come out on the tax return.
So a lot of building a wealth plan is about pulling information out of a client, which they may not think about very often, or they may be reluctant to reveal. So how do you get clients to open up about retirement and other long-term goals that they probably don't think about on a regular basis?
Yeah, that's a great question, Don. Asking open-ended questions and really actively listening to the clients, so listening to understand rather than listening to respond, can really help them open up. Questions like, what does retirement look like to you? Or do you have, what keeps you up at night? Do you have an idea of what your lifestyle needs and your current goals are? These may elicit strong responses and may lead them to really communicate emotion and a sense of what they want. Questions like, what kind of legacy do you want to leave for your family? What plans have you made in the event that you become disabled? Or tell me about your philanthropic intentions. Why is it important for you to retire at age 55 if they've mentioned that age specifically? And how will your retirement be different from your parents' retirement? That's one that people, that in my history has been very powerful in terms of the information that that comes out.
And I would imagine building trust with that client, whether it's through prior tax work or other types of work, building trust with that client is got to be of the utmost importance if you're trying to pull that type of information out of someone.
Absolutely, absolutely. And trust is built, over time and through different touch points. And trust is built when we're actively listening and we're making it all about the clients rather than all about, our firm or ourselves, and, really showing that you have that attitude of caring and connecting on that personal level, connecting about what the client values the most, and building that relationship will help break down the barriers that anyone may have had with the client when they're just preparing a tax return or looking to obtain information for a deadline.
Right. Well, Stephanie, as I mentioned in the open, financial planning is becoming an increasingly important part of the CPA landscape. So we really appreciate you spending some time with us and sharing these insights.
Thank you so much for having me, Don.
Thanks for listening or watching. For articles, resources, and events about financial planning, visit njcpa.org/hub/financial planning.